By the end of this video, you'll know how to make a few quiet tax decisions throughout the year that can meaningfully reduce what you owe, without scrambling at tax time. Many people think taxes are something you deal with in April, but the biggest tax mistakes and the biggest tax savings happen months before you ever file. Tax efficiency isn't about tricks. It's about timing, structure, and intention. If you only think about taxes during tax season, you're already leaving money on the table. Most people set their tax withholding once and never look at it again. But raises, bonuses, side income, or equity compensation can quietly change your tax picture. A mid-year check can prevent surprise tax bills or oversized refunds that just mean you gave the IRS an interest-free loan. This happens a lot with bonuses or side income. Someone does everything right all year, then gets surprised in April because their withholding never adjusted. Tax efficiency isn't just about what you invest in. It's about where your money lives. Traditional accounts, Roth accounts, and taxable brokerage accounts are taxed very differently later. Having money in multiple tax buckets gives you flexibility and control over future tax brackets. If you're eligible for an HSA, this is one of the most powerful and underused tax tools available. Contributions are tax-deductible, growth is tax-free, and qualified withdrawals are tax-free. Used strategically, an HSA can quietly support both healthcare and long-term planning. Even small amounts of side income change your tax situation. Home office use, education, software, mileage, and equipment only help if they're tracked consistently. Tax efficiency rewards systems, not last-minute memory. When you sell investments matters. Short-term gains are often taxed more heavily than long-term gains. Sometimes the difference between short-term and long-term gains is just a few weeks, but the tax impact can be meaningful. And sometimes waiting, or intentionally harvesting losses, can materially change your tax outcome. The standard deduction is convenient, but it's not always optimal. Medical expenses, charitable giving, and state taxes can sometimes be grouped intentionally. Tax efficiency often comes from coordination, not spreading actions evenly. Deductions reduce taxable income. Credits reduce your tax bill dollar for dollar. Education, child, and energy credits can have a much bigger impact than most people expect. Tax software is helpful, but it assumes average behavior. It won't question your assumptions. It won't proactively optimize strategy. And it won't tell you what to change next year. The most tax-efficient people don't chase write-offs. They think ahead. They plan in multi-year windows. And they make calm, intentional decisions long before filing season arrives. Tax season shouldn't feel stressful or reactive. It should feel like confirmation of decisions you already made intentionally. Save this, and start thinking about taxes as a year-round strategy, not a once-a-year chore. Follow @WholeUWealth